Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. So I'll start with a look at the daily chart of the S&P 500, and you can see that this market just continues to set new highs day after day. It's now moved up close towards the 4,200 area. The peak earlier this week was at 4,180. So it's getting close to 4,200. You can see how that area is a zone of resistance created by joining all of those peaks from November last year. And it comes in at around about that 4,200 area. So one would expect that that is possibly a zone where the market might begin to just take a little bit of a breather. And if it does, then the big support area down below would be down at 39.80. Now that is quite a long way down from where that 4,200 area is. It's about 5% to the downside. So questionable whether it even dips that low or not. We'll have to play it as we see it. But that certainly is where the big support level emerges when looking at that daily chart. And if we then zoom in and take a look at the hourly chart of the S&P 500, there you can see the recent trading activity a little bit more clearly. Interestingly, it did gap to the downside yesterday, being Monday, the 19th of April. So that gap was unfilled, and that's quite interesting just to note. It hasn't done that for quite some time. Most of the gaps that we've seen recently have been gaps to the upside. So yesterday's gap to the downside was the first one of those that we've seen in quite some time. The peak up at 41.80 is where there'd be some resistance if the market did want to head higher. And then down below 41.50 is where the first meaningful region of short-term support sits. And below 41.50, then there's more support down at 41.25. Interesting also just to note that the index has gone below the 15-hour exponential moving average there, and that's for the first time in quite some time. So it does give some sort of an indication that the market might just be beginning to consolidate a little bit up at these lofty levels. If we were to see further weakness down below 41.25, then that would see that gap down at 4020 potentially being targeted, but that's quite a long way down and would require quite a deep pullback from here for that to occur. If we then take our attention to the Nasdaq, let's have a look at the daily chart. The 14,000 area here is meaningful. That's where the market has peaked over the last week or so, and it seems as if it's bumped up against that area a number of times over the last couple of days. And yesterday it began to come off a little bit. To the downside, 13,300 is where the big support area is, and that was a breakout that we saw in the beginning of April. So a pullback to that breakout area would probably find support and buyers down at 13,300. Then finally, let's draw our attention to the Nasdaq hourly chart. And there you can just see that recent trading activity a little bit more clearly. Notice the peak up it's at 14,050, so just above the round figure at 14,000. Notice how the market has bumped up against that region a number of times over the last couple of days. And basically that 14,000 round figure seems to have been quite sticky in the last couple of days. The market did come off the boil yesterday. You can see it's trading now below the 15-hour exponential moving average and also beginning to break down below the 50-hour moving average. And if that weakness were to persist, then the next support area to monitor would be down at 13,800. And if that were to break, then there's a gap sitting at 13,650. That would be the next region. And below that, then 13,350. So overall, both of these indices still are making higher lows and higher highs, but there is some evidence of a little bit of consolidation beginning to set in. So just be cautious, I think, at the upper levels here where these markets are. As I mentioned, 4180 is overhead resistance now on the S&P 500, and 14,000 is resistance on the Nasdaq. If we were to see the market coming off a little bit from these areas, then you'd talk about the support levels that I mentioned on each of the charts down below. That's all I've got for you this week. I'll be back again next week with another look at both of these indices.